Good morning, Jeff. Thank you for hosting this event, and thank you for inviting the Pepperclub to participate in it. Okay, so this slide summarizes the salient details of our offering in 6 bubbles. The 5% that you see in the first bubble is a reference to the minimum deposit you require to enter into this investment should you choose our geared option. This is especially advantageous for PAYE taxpayers, though there's been a significant number of provisional taxpayers who have also taken advantage of our geared option. The 5% basically equates to about 54,000 Rand if an investor came in for the minimum subscription, which is 1,000 shares at 1,080 Rand a share. The second bubble is simply a confirmation that this investment is 100% tax deductible given the VCC status. Having said that, no one should ever make an investment based purely on the tax deduction alone, and I will shortly get into details of both the underlying asset and the management team that an investor is backing. The third bubble is a reference to the guaranteed operating yield underwritten by the hotel operator. This is a guarantee that was sought at the inception of this structure, well before the world was introduced to COVID, and has turned out to be a prescient move by the management team for our investors. The fourth bubble is a reference to the funding that we have arranged for investors. The funding is guaranteed as it is based in a large part on the quality of the underlying asset as well as the operating yield which we've negotiated with the hotel operator. Given that the cost of funding is correlated with the level of risk, we are pleased to confirm that the funder is able to fund any and all investors at prime, given the low risk. The fifth bubble is a reference to the put agreement which we have negotiated for investors. This gives an investor peace of mind that any downside is both limited and minimal. Importantly, this is a one-way relationship. There is no call option, so an investor can't be forced into being an unwilling seller. The sixth bubble is a reference to the non-financial dividend that an investor receives. For every 1,000 shares that an investor owns, they qualify for 6 nights free in the hotel per annum. Importantly, the blockout dates are minimal. The only 2 times in a year when an investor can't really use these free nights are the period between the 20th of December and the 10th of Jan, and the week in Feb, which is generally the first week when the mining indaba is on. So I said earlier that no one should make an investment based on a tax deduction alone. So let's talk about the underlying asset. The Pepperclub Hotel was opened on the 15th of March 2010, so it's traded profitably for just over 10 years. It's a 22-story luxury hotel situated in the west side of Cape Town CBD. It enjoys views of Table Mountain, Lion's Head, the waterfront, and the Cape Town city skyline. It's a full-service 5-star hotel which features a sidewalk deli. It's got a cinema, spa, swimming pool with views of Table Mountain, and a gym. It's operated by the highly reputable SBG Hospitality, who have operated this hotel since inception. Under their management, it's been awarded numerous awards, including Best Luxury City Hotel for 7 years running. The hotel has a 10-year history of operating profitably. It has averaged, with the exception, of course, of last year, 60% plus occupancy. And this is helped in no small part by repeat customers due to the fact that they enjoy a loyal client base. We spoke briefly about the operating yield. The operating yield that has been agreed with the hotel operator is based on historic performance. The hotel operator is underwriting a yield of 6.5% per annum, with escalations at 8% per annum for the 5-year term that an investor is obliged to hold these shares. What this works out is an average of 7.6% over the period for which an investor is going to hold these shares at a minimum. That compares favorably with the funding cost that I mentioned earlier, where anyone who takes the geared option will get funded at prime, which is currently 7%. Investors are thus well protected given both the operating yield and the put agreement. The VCC is currently fully invested. They've invested all the capital that's been raised. Conservative management has resulted in a very robust balance sheet which carries no debt, which must be a comforting thought for any potential investors, especially if you look at listed companies that have had to go to market for rights issues to pay down some of the debt that they carry. I'm going to talk briefly about COVID, especially with a hospitality investment. It would be remiss not to cover this topic. In April 2020, at the very start of the hard lockdown, a renowned international investor, Mark Mobius, was locked down in Durban. He wrote a letter called A Letter from Durban. His closing paragraph read, "Despite all the challenging issues facing the country, the bottom line is that South Africa is a fundamentally rich country in terms of agriculture, mining, tourism, and certain manufacturing. We are confident the country will emerge from this crisis." In SA, the tourism sector contributes 7% to the country's GDP. It's responsible for 1.5 million jobs, which works out at just over 9% of the country's total employment. While very little is ever guaranteed, our operating yield is one of those exceptions. It's hard to imagine a post-pandemic world where people are not desperate to travel again. They've been quarantined in their homes for months. Indeed, some of our investors from the first capital raise have been quarantined at home and have used their free nights when the opportunity arose to travel again. People are low on morale and looking for ways to treat themselves. Experts have pointed out that the travel industry is poised for an explosive rebound once society returns to normal. How quickly this rebound happens will depend on several factors, including the availability of vaccines. It's important to remember that even if we don't receive vaccines in South Africa, a foreign tourist who's received a vaccine in his home country will still travel. One thing is, however, certain. When the good times return, hotels will be some of the biggest beneficiaries. This is borne out perhaps with at least 2 examples which I can give you. Last year, the Radisson announced the opening of 2 more hotels in South Africa, one in Durban and one in Joburg. And Bill Ackman, who runs a big investment fund, increased his holdings in Hilton during this period. Let me now tell you a little bit about the partners. The Solomon Brothers Group are an internationally renowned real estate investment and development group with in excess of 40 years of real estate experience in large-scale projects that straddle the retail, hospitality, and office sectors. David Solomon has been nominated as Jewish Businessman of the Year and served on the boards of 2 JSE-listed property companies, namely Redefine Income Fund Limited and Arnold Property Fund. Jeffrey Solomon is also a chartered accountant and has served on the same 2 boards, Redefine and Arnold. Grovest are pioneers of Section 12J in South Africa and promote multiple different Section 12J funds. Grovest administer upwards of 40 Section 12J funds, which makes them the largest such administrators in this country. Section 12J funds under management exceed 1.5 billion rand. Grovest is led by Jeff Miller, a qualified chartered accountant with over 30 years of experience investing in listed and unlisted companies. Jeff has co-founded numerous companies, including Brandcorp, which was listed on the JSE in 1997. The VCC is chaired by Mutli Mokhasi, who is a former co-founder and executive of Vantage Capital. Mutli was with Vantage from 1999 to December 2016, and Vantage was a financial services firm with in excess of 8 billion rand under management. I am a director of the fund manager, the VCC, as well as the fund manager. I have in excess of a decade's experience in direct investing, private equity, and corporate finance. Critically, this spans a number of sectors which include real estate. It's worth pointing out that this VCC probably has the lowest fee structure in the industry. There are no capital raising fees. The annual management fee is only 0.5%. The VCC is projecting a target IRR of 19.7% for individuals and trusts if one excludes the value of the free room nights, and if one assumes a value for those room nights, the IRR increases to 23.5%. So let's talk about the exit. At the most basic level, an exit could be a trade sale to either a hospitality group looking for a hospitality asset in Cape Town. It could equally be an exit to a real estate group looking for a prime piece of real estate in the city. There's also an option to gear the underlying asset, which, as I mentioned earlier, carries no gearing, and distribute that capital to shareholders. And then there's the possibility of listing the structure on the JSE. To this end, we've already had an AGM in November and converted the company to a public company. It's worth pointing out that two of these options are not mutually exclusive. We could well list the company and gear to return capital to shareholders. We've got an investment deadline for investors who are interested, and we would like to receive documents by the 21st of Feb 2021. Thank you, Jeff.
Okay, so thanks, Amaresh. It's a very interesting. So just, if I can, we've got a few minutes. I'm just going to use this time to recap and pick up what I understand from this particular investment. Is that albeit that COVID really decimated the hospitality industry, is that there is an underpin guarantee for this particular investment being 6.5% of operating profit, and which is guaranteed by the promoters.
Correct.
And that guarantee escalates at 8% per annum for a period of 5 years.
Correct, which is also perhaps a very attractive rate, given that for sure that 8% is going to be higher than CPI.
Okay, good. And then in addition, that in terms of the guarantee, that there's a gearing option. Now this is in terms of what we on the presentations today, which is over 20. This is the only fund that I'm aware of that is offering a gearing option. So really what it means is that you put 5% down now when you subscribe by 28th of February 21.
Correct.
You then have to pay the balance of the 40 by end of September 21, and the 55% additional gearing only has to be paid in year 5.
Correct.
Okay, and for the gearing, the amount is charged at prime.
That's right, and critically, the funder has agreed not to reprice the facility, so we won't call someone up in 2 years and say markets have changed or your circumstances have changed, it's now prime plus 2. The gearing, prime may go up or down, and your rate will go up or down, but it will stay at prime for the duration.
Okay, and in addition, that means that, and then there's a put option. So if anyone is not happy with the investment after 5 years, they can put it back to the promoters at 55% of the subscription price.
Correct, which is why we say it's a nice way to de-risk the investment.
So theoretically, if someone wanted to obviously put down the 5%, pay the 40%, then the 55%, they can only have to pay in 5 years, and they can use that for other investments or do whatever they have to do within this time frame.
That's exactly right.
Okay, good. And then just one question, is there any blackout periods for the free bed nights that you may get?
There are only 2 blackout periods, the 20th of December to the 10th of Jan, and the week in Feb when the mining indaba runs, which is generally about the first week of Feb. And so to put a finer point on it, you can come during school holidays, Easter, the August, the Jazz Festival, none of those prime dates are blocked out.
Okay, great. So thanks, Amaresh. I know last year you raised somewhere close to 200 million rand during the cap raise. I'm sure you're looking to raise a similar amount. Good luck. I mean, it really is a compelling offering, specifically with the gearing, the guarantees, and the puts. So I'm sure you'll do well. I look forward to your success, and thanks for participating.
Thanks, Jeff. I mean, I'll tell you, a number of our investors reinvested. Some of our provisional payers invested at August. And so we're looking forward to some repeat business and referrals from some of our existing investors.
Good luck.
Thanks a lot.